Hey, Greg, it's Lee. How are you today?
It would help if I unmuted myself, Lee. So, hey, neighbor, got to make it
How
up.
you doing today? Um,
Pretty
I
good.
just want to let you know, did you see my email? There was an actual link to this call. I went back to the last one and just
Ah,
picked up the link, but there's no the email you just sent didn't have a link to this particular call.
gotcha. All right. Well, at least I'm recording it, so anybody that
Okay.
missed it, anybody that missed it can get it that way. And I'll have to correct that template that I used there for that going forward. But it looks like there's a few folks that either did what you did or one way or another.
I was pretty proud of myself because I'm technologically illiterate. I was figure that out.
Yeah. All right. Well, thanks. Yeah, I guess we'll see how many folks join with that being the case. But hopefully, I think I've been doing these emails enough that probably folks have a copy of it, and I'll have to do better at that next time. But thanks for the heads up, man. So let's get into it. What we can see here for the first half of March is that the uncertainty that has been all over the news, for a variety of different reasons, tariffs, Ukraine, Gaza, all of that, that's also impacted the stock market pretty significantly, is having not a not a fall off a cliff impact. It's not like the stock market, but it's certainly not giving us tailwinds. We got a little more headwind that we're dealing with. As you see right here, the drop is 3.34% versus same period last year. We were hopeful that we might see some year-over-year gains this year, but I think with all the uncertainty we're dealing with, it's just not materializing at this point. I pulled the data, several different ways. In addition to the cohort that we just have been tracking right along, I just pulled, specific fleets. I looked at it sort of six ways to Sunday, and it all, no matter how you look at it, the actual percent drop is a little different depending on exactly what lens you look through, but it is definitely down no matter how you look at it. Um, this is kind of, where it is because it was also down last month, and so we're seeing it drop a little bit more, but not, like I said, not off a cliff. Um, and then here is our Part 91 trend. It's also a declining trend, but still above last year's numbers. So we're at 1.2% growth there, which is good for everybody in 91 and 91K land. The trend is the same in terms of, January was the best month, February things dropped, and this month they're slightly um, less. But, as you can see here, in both January and February, we clocked in above last year, and for the month of March, it's a little too close to tell. It's going to be very close to last year on the Part 91 side. When we look at the combined, it uh, sort of is a more, I guess, linear drop when you combine the two things and look at it together. We started out well in January, and we're dropping a little bit both months, but you can see that we were above last year in January, just above last year in February, and I think for the combined total too, it's going to be close, but exactly hard, not exactly too close to call, I guess, at this point. Um, Light jets are the size class that has struggled the most this year. Um, and that hasn't changed. We're off 7.6% for the year, and it's actually slightly worse in March so far, off 9.8%. The mid-size jets are off 2.1%. So they reversed their, they were the mid-size were up for January and February, which was an interesting uh, you know, change because last fall they were hurting worse than the lights were. Um, Super mids, of course, I mean, this just is a recurring pattern. They're doing the best of any of the size classes out there. It'll be interesting. I've been out on the road a bit over the past month or so, and there is a lot of concern about Canadian tariffs and how they might affect Bombardier. I was aware of an aircraft deal that almost fell apart because they thought the tariffs were going to get in the way, but then the tariffs got postponed and the deal went through. Obviously, that could have an impact on parts and other things and not just new aircraft sales. So interesting to think about that. But anyway, super mids are still, the most popular size class. Large cabin is doing all right as well, but you'll see that the third week of the month, they were actually off. And then the last week of the month of March, they recovered. And we're tracking just about the same as the year-to-date trend, up 2.5% there. Turboprops have been off right along. I think that trend is just going to continue. And then when we go major markets, here is LAX, which is up with the airlines, and off a bit when you get to GA. And when we go to Van Nuys, the entire GA market for the LA area, Southern California there, because of the fires, I think is still soft. It's got some of the biggest sort of year-over-year declines, and that's really the best explanation I have for it. Here is LaGuardia when we bounce over to the East Coast. Got some spikes in there where there's been some extra activity on the airline front. We don't bother to track GA here because there's so little at LaGuardia, but we do track it at Teterboro, which is obviously 100% GA. And you can see there, we're up 7.4%. So that's quite a nice uptick, despite whatever concerns there are about the economy or whatnot. There are people that feel like they got to go to either go to or leave New York. So that's positive. White Plains, not quite the same story. They're sort of level with last year compared to a 5.7% year-over-year gain for, January and February. So things have tapered a little bit there. Farmingdale is pretty strong, up 6.6%. So you can see that New York Metro as a whole is pretty strong. Morristown off slightly, but the gains on the other cities, they're kind of more than make up for it. Chicago Midway, all traffic is down a bit. That's including Southwest. But it reverses the trend and is up almost 1% when you pull out the airlines there. And that's a better trend than what we've seen for the year to date. So that's positive there. Chicago Exec, not quite the same deal, with 2.5% drop year over year compared with a 4.8% jump for the year as a whole. So we're seeing sort of a softer trend in the Chicago market, at least at Pewaukee. So going down to the southeast, we've got airline traffic up significantly there in Atlanta. Some schedule changes in there. When we pull that out and just look at GA for Atlanta, we are off 8.9%. So it's a little weaker. Again, this airport with only, generally speaking, less than 50 flights per day. It's not a huge GA airport for Atlanta. You see an awful lot more activity at the other satellite airports. We look at Peachtree DeKalb as kind of our airport for the market, and you can see there that we are pretty much even with last year, up 0.2%, which is a little bit weaker than the year-to-date trend. Here is Boston, where we're seeing, this is including airline traffic, we're seeing some fairly significant growth there overall. The growth on the GA side is still there, but it's not growing quite as quickly as the airline traffic is. And the month to date is off 2 points, down at 4.4%. I mean, still growth, but off from the 6.4% year-to-date trend. Looking at Bedford, we're actually seeing a little weaker situation there, where the traffic is off 2.1% for the month of March, month to date, and we're up still for the year by 1%, but that's softer traffic here in the first half of March.
Excuse me. And then here is Reagan, where this is airline traffic, and we've seen a spike there. And then here's Dulles, where we've seen quite a big spike. And this is airlines and GA, but the spike continues, and you can see that we're up 14.7% month to date in March and 21.1% for the year to date. So big double digits there. And it's even more pronounced when we look at Manassas, right? So Manassas is seeing significantly more traffic. Of course, we're still under 100 flights a day, but if we looked at, history for Manassas, seeing 92 flights a day like we did on the 14th is pretty uncommon. Now, here's Charlotte, including the airlines. Airline traffic is definitely up there. And then here it is when we just look at GA. So we're still pretty strong on the GA front, up 10% for the month to date, which is slightly less than 11.2% for the year to date. Then when we scroll over to our second home cities, we can see that it's clearly not in season for the Hamptons. It's below. The numbers are buried below the chart there. We are showing that on a month to date basis, we're tracking the same as last year. And that does appear to be the case. Even when you look at the various days in there, we're almost identical within a flight or two. Here is Aspen. We're getting near the end of season there. Here's with the airlines. When we pull the airlines out, we're still tracking with last year, 0.2% above, but that is weaker than our year-to-date trend. Some of that is just end of ski season. Here we are at Vail with the airlines. We pull the airlines out and we're actually off by 2.6%. So, I mean, some of that is whatever. I'm assuming there was an event or something in here that didn't happen this year, and that right there would account for probably a big chunk of that difference. Here is Denver Centennial, and while it's not really a second home city, we include it with the next to all the ski areas out there. So you can see that very strong traffic for the Denver market, up 9.1%, which is almost three times better than the year-to-date trend. Here is Nantucket, and we'll just go to Martha's Vineyard too. Both of these are off season. I mean, they are showing that they're down, but when you're talking single-digit flights, those percents sometimes get out of whack. We go out to Napa, and you can see that Napa's did strong so far this month, up 10.3%. compared to 4.3% for the year to date. So good deal there. Bandon Dunes, also popular, up 21%. Of course, this is one where, flight counts are also on the small side. So we have to take those percents with a grain of salt. Here is Scottsdale, where, we continue to post year-over-year gains. It's been a good year for Scottsdale. Up 2.8% for the month, which isn't quite as strong as the year-to-date trend, but it's still, in positive territory. Jackson Hole was as popular, if not more popular than Colorado for skiing this year. It was up 11.4% for the year as a whole, still up 4.2% so far in March. But you can see that we're coming into the end of the season there. Volume there is going to drop off by the time we look at our next call. And then here is Hilton Head. Had a very strong first half of March, up 27.8%. Granted, it's also one of these markets that's in the 40 to 50 flight a day range, but we've seen over 150, 160 more flights in the first 2 weeks of the month than we normally see. Looking at other cities starting in Texas with Addison, in the Dallas market, you can see we're off slightly, 2.2% down. When we bounce over to Dallas Love with all the airlines and whatnot, we're off 0.1%, and then we're off a little bit more, off 1.1% when we pull up the airlines there. So the trend for the year to date is still positive at 3.2, but we have seen a softer March. Here is Opelika doing well at 7.9%. So a improving trend down there in southern Florida. And you'll see Fort Lauderdale International, including the airlines, is up just a bit. It's up even more significantly when we look at, when we pull out the airline traffic. There's a couple of trends going on here that are doing this. There's runway construction at Fort Lauderdale Exec, so that explains why they're down 20%. The construction is over now, but it obviously had a big impact on the first part of the month there. The other thing that would have affected Lauderdale International is, we'll see it in a minute, the TFRs at Palm Beach. But here is Naples also having a great month of March so far, up 6.6%. It's not quite the 8.7% we've seen earlier, but still, strong year-over-year gains. And then here's Palm Beach. This is the airline traffic, so the TFRs even affect that, but they affect GA even more. And I should say, that wasn't just airline, that's the combination of airlines and GA. So when you have a huge hit to GA, you see it on the airline chart. And you can see here that we're off 31.5% for the month. There've been several days where the traffic was seriously impacted by TFRs. But that's part of the reason that some of those other South Florida airports are doing better. And there's some that I don't show on here, like Stewart, that are right up the road, Stewart, Vero Beach, places like that, that I think also get some of the overflow and reliever traffic, and Boca for what that's worth. Here is Nassau, and this is now just GA. I pulled out the airlines because keep getting asked for that. And you can see that Nassau continued to be popular even with last year. So dropped a bit because we have a 6.3% year-over-year gain for the whole deal. Part of that really was the New Year's holiday where things just were off the charts. But we've seen pretty consistently good performance outside of that. So looking at our top 50 routes, I will jump to the most recent. And I would say I don't see anything surprising, right? We're still in the middle of the north-south corridor being the top routes, and there's nothing in here, that indicates anything other than that. Our Opelika, Teterboro, and vice versa are the top two routes, as it should be. We are seeing some Nassau across the board in there as a popular destination. That's also not a big surprise in terms of concentration. So, the long and short is no real surprises in the top 50 routes, nothing new that's popped up that I wouldn't expect. And then here's where we sit with fuel. So modest changes in price. We're looking at single digit increases or decreases. That was the wrong week, but it's the same story. Whoops. Jumping around too fast. Single digit changes, even lighter than that week I was looking at. This is the most recent period, right? And we're seeing 1 cent, 4 cents, up or down one way or another. So not a lot of change in prices over the last 2 weeks. Then when we look at the prices overall, yes, they've come down slightly in a lot of places, but the usual, same old Colorado, Alaska, Rhode Island are the most expensive places to buy fuel. And that's not a surprise. That's just what we've been seeing right along. $7.34 is the average price in the state of Rhode Island. So, tanker in there if you can. And that takes us to the end of this week's deck. If anybody has any questions, thoughts, a slide you'd like to see again, by all means, put something in the chat. I think, nothing we have here is, I don't think it's a big surprise to think that we're seeing some softer volume because of the uncertainty in the global markets. If anything, it's, decent to see it only be off by a few points when the markets are off, much more significantly. So I think that's, if anything, that's sort of the silver lining there. The charter market's been resilient under the circumstances. And that's really the story. So everybody going to be in New Orleans next week? If you are, do please stop by booth 201 and say hi. I'll be there all week. And we are throwing an event Tuesday night. So if you haven't received an invite for me from the event, send me a note at greg@tivoli.com and I would be happy to invite you to that. And that is what I've got for this week.
Thanks, Greg.
You bet.
Greg, thanks very much.
Sure thing. We'll talk
And
to
I'll see you in New Orleans.
See you in New Orleans. Yep. All right. Take care, guys.